And good morning, good evening, good afternoon, traders all around the world. This is FxPassion and this is a recorded webinar, right? Melbourne, now it's 10 p.m. Melbourne, Singapore, 8 p.m. Madrid, it's 2 o'clock p.m. New York, 8 a.m. Toronto, Canada, 8 a.m. and London, England, 1 p.m. Everybody, this is Forex trading for beginners. And our goal for you is to become consistently profitable, minimum 3 months, knowing when, how and why you make and or lose money. And we are learning about the Contrarian Fibonacci. So this is a recorded webinar. You should not be allowed, everybody, to trade with your real money until you reach the goal. And there is disclaimer, don't trade with money you cannot afford to lose, and the webinars are not investment or trading advice. They are for educational purposes only. Remember, 90% of traders who makes it between the 3rd and the 5th year of learning, everybody. So let's talk about the Contrarian Fibonacci. We sent you a recorded webinar yesterday. I hope you all watch it and learn it. So how to use the 3 Fibonacci's, the Fibonacci, this is the Fibonacci of the confirmation. This is the, yes, there is one more Fibonacci coming, so Contrarian, there you go. This is the Contrarian Fibonacci. Number 1, we use the Contrarian Fibonacci to trade retracements, and we are going to talk about trading retracements today, which is risky, to find the C of the original Fibonacci. And the trading rules until the extension of the Contrarian Fibonacci is still inside the AB boundary of the original Fibonacci. You are entering trades with a probability of success 50-50. If you can find the Contrarian Fibonacci with the projected extension above or below the capital A, capital of the original Fibonacci, you are entering 80% probability trades. When you find the C, your stop loss should go 10 to 100 pips. It depends on the time frame, above or below the A of the original Fibonacci, and your take profit should go 10 to 100 pips below or above the D of the original Fibonacci. Number 4, when you find the C, you should check the trend direction from the larger time frame and compare it to the lower time frame prior to entering the trade. And here is the mistake, I should change number 5, right? The last thing you need to do is to identify in what zone are the Fibonacci's on the larger time frame and the smaller time frame. So are we in a rally or dip, or are we trading a retracement, or are we trading an extension? And as a rule, for high probability trades, we should always enter in extensions and in the same direction. All other trades are low probability trades, meaning they are riskier. Okay? Now, I received some emails, everybody, and let's open a screen. Dear FxPassion, I would like to use the Contrarian Fibonacci, but I have difficulties in finding it. Okay, and some of you wrote email that, oh, this is difficult and it's complicated. Okay, so we are going to start very slowly for the beginner trader. Okay, now what do you need to know and what do you need to learn? Everybody, the Contrarian Fibonacci is not difficult, okay? So stay with me, and we are going just briefly for the beginner trader, and very slowly we are going to remember the rules, okay? So in an uptrend, what is the A? The A is the starting point, is the absolute low, right? Is the lowest low in an uptrend, right? This is the A, right? So starting point of the uptrend. Let's adjust. So this is the starting point. of the uptrend, and it goes on all time frames. So we were in a downtrend, right, like this. The market broke our downtrend line. So this is the starting point, is the lowest low, is the absolute low. But as a rule, if you want to analyze quicker, just bear in mind that the A is the starting point of the trend, in this case of the uptrend, right? Now, what is the A on the downtrend? It's all the same, just in the opposite direction. The A is the starting point of the downtrend. Okay? It appears that it's difficult, but it's not. It's the same rules, just in the opposite direction. So in an uptrend, the A is the starting point of the uptrend. In a downtrend, the A is the starting point of the downtrend. Okay, you need to remember this and practice, of course. I'm not going to say to you that it's easy, because in the beginning it's not, but I'm telling you, if you practice, it's not so difficult in the end. Okay, and we are going to get to the contrarian Fibonacci. Now, let's get back to the uptrend. What is the B? The B is the first high as soon as possible. The first high as soon as possible after the A. Right? Nothing complicated, nothing too difficult. Now, what is the B in a downtrend? It's the same. The B in a downtrend is the first low as soon as possible after the A. Right? Nothing complicated. So, now, let's go back to the uptrend. What is the C? Well, the C is the lowest point, not necessarily a low. It's the lowest point inside the AB boundary after the B. This is the C. Now, what is the C in a downtrend? It's a highest point, right? In the uptrend is the lowest point. Why? Because we have an up AB boundary. So the C is the lowest point, but in a downtrend, what is the C? The C is the highest point inside the AB boundary after the B, before the market hits the appropriate extension, right? And finally, where is the D? Well, the D is the appropriate extension regarding to the C. If the C goes to green, right, or pink, in this example, purple, so that the extension is going to be pink. If the C goes to retraces to the white, is going to be the extension is going to be white. If the C retraces to the red, the extension is going to be red, and orange, which is 0%, then the extension is at orange, right? So this is the AB CD, appropriate extension. Where is the D in, or what is the D, or where is the D in a downtrend? Well, it's the same. It's the appropriate extension regarding to the C. Dukascopy webinar, new content upload. Oh, nice. Watch videos here. Thank you, Dukascopy. Thank you, Nikita. Nikita is doing a great job, everybody. Close. Okay. So, what is the D? The D is the appropriate extension, right? Like in here, is the appropriate extension regarding to the C. Okay? Those are the rules A, B, C, D of the original Fibonacci. Okay, now talking about the contrarian Fibonacci. This is a trick. Take the rules of the down Fibonacci, take the rules of the down ABCD swing of the original Fibonacci, okay? Remember the rules and just project, just copy these rules, those rules, into the original one, right? So And of course, what is difficult, challenging in the beginning is because we have the A, the B, and the C, and the D, and then we have the sub A and sub B and sub C, right? And sub D. But just remember the rules of the down Fibonacci and link it on the left to the original Fibonacci. So this is, we're going to delete the arrow. Now we're going to put a sub A, right? This is the sub A, and we're going to put it on the original Fibonacci. So if sub A equals to the rules of the down A, B, C, D of the original one, right? The sub A equals the A. But we need to write something different because this is a contrarian. So where is the sub A? What is the sub A? Well, what are the rules of the down Fibonacci? The A of the down Fibonacci is the starting point of the downtrend, right? So what is the sub A? Where is going the sub A? Where is going to be the sub A? Well, if the A of the down Fibonacci is the starting point of the downtrend, right? The sub A is going to be also the starting point of the downtrend, right? What is challenging in the beginning is that the sub A, the contrarian Fibonacci, is plot, we drawn it on the retracement. So this retracement, this is a short-term trend, right? So this is sub A is going to be the starting point of this smaller trend, which is the actual retracement, right? So the same rules apply. Now, where is or what is the sub B? If you think about the rules, sub B, if you think about the rules of the original down Fibonacci, what is the B? The B is the first low as soon as possible after the A. And when you are drawing the contrarian Fibonacci, what is or where is the sub B? Well, the same rules. Is the first low as soon as possible after the sub A. So it's not so difficult if you think, right? Because you are just applying the same rules to the retracement, right? Yes, you have the sub A, sub B, of course, but there are the same rules. Now, what is or where is the sub C? Sub C. What are the rules of the original Fibonacci again? What is the C of the original down Fibonacci on the downtrend? The C is the highest point inside the AB boundary before the market hits the appropriate extension. So if you just link the same rules to the retracement, where is the sub C? Well, the sub C is the highest point inside the sub A and sub B boundary after the sub B before the market hits the appropriate extension, right? And of course we need to draw the contrarian Fibonacci on the chart. And okay, let's make it a little bit wider. So just for this example, sub A, sub B, sub C, something. So sub A is the starting point of the retracement, is the starting point of the downtrend, short-term downtrend. Sub B is the first low as soon as possible after the sub B. The sub C is the highest point inside the sub A and sub B boundary after the sub B, right? And we need to draw and color code it differently. Original Fibo, right? So where is the sub D? Well, the sub D is the appropriate D extension, right? So sub D, there you go, this is the sub D. Green goes to green, and this is the sub D. It's just an example. So if you look here on the left and on the right, yes, it's challenging in the beginning, but we didn't I mean, we did just the same. We applied the same things from the down Fibonacci. We applied the same rules to our contrarian Fibonacci. Okay? The same rules, just in the opposite direction. And what is the opposite direction? It's a downtrend. Short-term downtrend. Okay? Sub A, sub B, sub C, sub D. Now, some of you have difficulties identifying the Fibonacci, the contrarian Fibonacci. So, what we are going to do, sub A, sub A, sub B, sub C, sub D, like here. We are going to zoom in this example. Now, you need to be aware, everybody, that the contrarian Fibonacci is a tool to measure retracements. Okay? What does this mean? This means that sooner or later, in an uptrend, sooner or later, the market is going to break your retracement and is going to break your counter trend line just to confirm the trend, the overall general trend, right? You need to be aware of this. This is why the contrarian Fibonacci measures the retracement. Okay, now when you have the first A-B boundary and B must be a high, so it's a center candle with two candles on the left and two candles on the right, right? Two candles on the left and two candles on the right. Now, when this happens, and this is the wick, let me see if I can, no, okay, no wick. So, when this happens, where is, I mean, you don't have the crystal ball, right? Neither do I. We don't have the crystal ball, but what we know so far is that the market waves. So the market is in an uptrend, the market is going to make a higher high and then it's going to fall because it must make, this is a must, it must make a higher low. Okay? And then of course when the time comes it's going to push and it's going to make a higher high in an uptrend and then it must fall. It's a must. Oh, why is that? Well, in order to wave, the market must extend and retrace. If there is no retracement, then the market would go in the straight line, right? So, for those of you who have difficulties to drawing the contrarian Fibonacci, if this is the example, so you have the first high, which is the B of the original Fibonacci. Now wait for the first low. Wait for the first low, okay? And what is going to be? Well, this is going to be a higher low, right? Why? Because we are in an uptrend. We don't know when the first low is going to appear, right? We don't know if the first low is going to appear at the 618 Fibonacci level, or maybe it's going to appear at the 50 Fibonacci level, or 382 Fibonacci level, or maybe it's going to appear at the 21.4% Fibonacci level, or maybe 14%. We don't know where the first higher low is going to appear, but what we know is the market, in order to wave, it needs to retrace. Okay, so when the first, so this is the sub A, right? When the first low appears, just draw your Fibonacci, I mean the contrarian Fibonacci, and this is going to be our sub B. Draw your contrarian Fibonacci and try to identify what is happening now inside the sub A and sub B boundary. Okay, so this is the game, for the lack of a better word, of course, but this is the financial game right now. What is happening inside the sub A and sub B boundary? Okay, now don't forget that the original Fibonacci is stronger than the contrarian. Never forget that the original Fibonacci is stronger. Why? Well, because the original Fibonacci goes with the trend, and if you're going to trade retracements, be aware, because sooner or later you are going to lose on the retracement trade. Okay, how do I know? Well, this is common sense, everybody. If you are trading retracements, sooner or later you are going to have a losing trade. Why? Because the market in an uptrend is pushing up, right? It's making higher highs, higher lows, higher highs, higher lows, and of course, if you are going to trade the retracement, you are going to lose sooner or later. Am I saying that you shouldn't trade the retracements? Well, absolutely not. Just be careful. Okay? Now, let's continue address the contrarian. So this is just an example, right? Now, sometimes what happens sometimes? Sometimes the market is going to retrace. Now stay with me. Is going to retrace inside the sub A and sub B boundary and start to fall. Okay, so the market retraced inside the sub A and sub B. Okay, but, and now this is the challenging part, this retracement inside the sub A sub B boundary is maybe an extension of the original AB, right? Now, if this is the original trend, the market's making higher highs, higher lows, and we are here right now, and this is the original Fibonacci, right? We know that in some point in time the market is going to start waving back up, it's going to push up, because in order to continue the uptrend it needs to make a higher high, right? So the retracement inside the sub A sub B boundary maybe equals the extension. And why I'm saying maybe, and this is the difficult part, this is when sometimes it's challenging, because we don't have the crystal ball, right? So if the market is going to break the B and is going to break the sub A, what it just did? Well, it made a higher high. So this retracement inside the sub A sub B boundary, it was an extension in reality of the AB, of the original Fibonacci. Now the problem is, before this happens we don't know. This is just a speculation. Okay? When this happens, what we know? Well, this is a confirmed retracement inside the sub A and sub B boundary. It's a confirmed retracement. Is this a confirmed extension? No, not yet. Because in order to be a confirmed extension, everybody, it must make a higher high, right? It must continue the uptrend. Okay? Now, if you want to trade the retracement, and let's say that here it appears a bearish engulfing candle, and you say, oh, I'm going to take this opportunity and I'm going to enter on this counter trend line of the sub A and sub B, right? If you are going to trade this sub A sub B, if you're going to trade this contrarian Fibonacci, and you are going to take opportunity of this counter trend line break of the contrarian Fibonacci, and you are going to enter with this bearish engulfing candle. And this is just an example, of course. Everybody remember this, not this line. Have a stop reverse order. Have a stop reverse order on the sub A. Okay, so stop reverse, stop reverse order. What does this mean? This means that if this confirmed retracement inside the sub A and sub B turns out the extension, okay, this is the challenging part, because we don't have the crystal ball, we don't know what is going to happen in the future, right? But if this retracement turns out to be an extension, then you need to reverse your sell order from a sell to a buy. Okay, remember everybody, the original Fibonacci is stronger than the contrarian. So let's say that you want to short in here the market, so let's write this down. Okay, sell order, right? You just sold NZD-CAD in this example, you just sold it in here. Have a stop reverse if in case the market, instead of pushing down and hit the appropriate extension of the contrarian Fibonacci, is going to move into the extension of the original Fibonacci, because it's part of the overall uptrend. Okay, and you can trade retracement. Yes, sometimes they are going to work out, sometimes they are not going to work out, but what I guarantee you is, as if the trend continues, you are going to lose on your retracement rate. And we explained 2 times already. Why is that? Because the extensions are bigger than retracements, right? In order to wave the market in an uptrend, it must make higher highs and higher lows. That's why you need to have a stop reverse order up here, right? And you need to change from selling the currency pair to buying the currency pair. Okay, now when this happens, everybody, let's say that the market stopped out our trade, our sell order, right? And we are in a buy right now. This is our buy, entry, buy, entry, buy from the stop reverse. Okay, this is our entry buy from the stop reverse, and the market went up, right? It broke our contrarian Fibonacci. We're going to delete it, it's not useful anymore. And some point in time, so this is, we are in a buy right now, in some point in time is going to make another high, let's say at the 127 extension, right? At the white level, it's going to make a high. Okay, now for those who have problems identifying the contrarian Fibonacci, when this happens, the rules are the same, right? So we don't have the crystal ball, but this is what? This is the sub A, right? Because we moved our sub A from the B point, from the B high, right? In the beginning, the sub A was our B, because this was, the B was the starting point of the retracement of the short-term downtrend, right? And the market just make another higher high. So this is our now sub A, and of course this sub A is speculative in nature, because we don't know what the market is going to do, right? And this is the challenging part. Now, but this is the sub A. Passion, how do you know? Well, I don't know. But this is what I know, that if the market is going to retrace and fall further, this is the starting point of the retracement. Where is the sub B going to be? We don't know. We don't know, but what we know is the market is going to retrace, right? And in retracing, the market is going to make a higher low, right? So the market is going to retrace and is going to make a low somewhere like this. Come on, come on, come on. I need to take it. Come on. Let me see if I can take it. Okay, no problem. I'm going to draw. So this is another low. 2 candles on the left, 2 candles on the right. Okay, just graphically, don't bother with the quadrants. Oh, Passion, you don't have 2 quadrants on the left. It doesn't matter, it's just to explain to you. Okay, so this is our sub B. Now forget about the entry. The point is not trading right now. The point is how to identify the contrarian Fibonacci. Okay, so in the beginning the contrarian Fibonacci was at the B, because this was the starting point of the retracement, and the market pushed up higher, right? The market is waving, of course, and so this is our new sub A and sub B, right? Now, oh, Passion, but it's difficult to trade. Well, we are not using the contrarian Fibonacci just to trade. We are using the contrarian Fibonacci to identify the confirmed C of the AB boundary of the original one. So this is the C right now, yes? This is the C right now. Why? What is the C? The C is the lowest point inside the AB boundary after the B, before the market hits the appropriate extension. So this is the C right now. Okay? And if you remember, our contrarian Fibonacci was like this before the market broke it, right? Let's color code it like this. Okay, so should I buy this C? Should I enter buy in this market? Well, if I did this, I would enter in a 50-50% trade. So this C is not a confirmed C. Is a C, yes it is, but it's not confirmed. Meaning the probability of this trade, of this Fibonacci swing to be successful, it's 50%. I have 50% chance of this market if I entered here buying, right? Or if I enter here with the stop reverse order, I have a 50% chance that the market is going to hit the D. Okay? Now, we are going to clean the contrarian, the first one, because the market broke it. It's not valid anymore. And we are going to draw it again here. So we have a new sub A, sub B, right? Sub C and sub D. So let me write this down. Sub C, sub C. And if you find this topic complex, everybody, watch the same webinar again and again. Okay, watch it tomorrow again, and don't be angry and mad and pissed off and oh, I don't understand, and it's, well, take it easy, okay? You need time. So watch this webinar today, watch this webinar tomorrow, okay? Watch it 5 times, 10 times if you need it, until you get it. In the meantime, send questions to me, okay? Send questions, no problem. Okay, so sub A, sub B, we have new levels, right? We have a new sub A, sub B, we have a new contrarian Fibonacci. Now, 1 or 2 things are going to happen. So maybe the market is going to retrace inside the sub A and sub B boundary and fall further down. This is one thing, what is going to happen, one thing that could happen, right? Or what is going to do, the market can do the other thing, right? It can retrace inside the sub A, sub B, and it can push higher up, right? And hit the D extension of the original one. Either way, this was, if this would be the example, this was a 50% rate, right? And don't bet your fortune and your success and your profitability, everybody, on 50% rates. I have students, everybody, that are trading 50% rates, but what? They are not consistent. Of course not. It's 50-50, right? 1 month they are profitable, the next month they have a losing month, the next month they are profitable again, right? They win a trade, they lose a trade. So don't bet your trading success on the 50-50 trades. Now, again, the topic today is how to adjust the contrarian Fibonacci, right? So this is the new level, and just for this example, this is the sub C, and let's say that the market finally reversed and the market decided that it's going to find the retracement into a deeper level inside the AB boundary of the original one. So this is the sub D, the market hit the appropriate sub D extension, right? What we're going to do? Well, we're going to adjust our down Fibonacci, our contrarian Fibonacci, right? And sub A goes to sub C, right? Sub A goes to the sub C, and sub B goes to the sub D, right? And again, we are going to have the retracement inside the sub A and sub B boundary. Of course, the retracement are speculative ones, always. We don't know if it's just a retracement inside the sub A and sub B, because maybe it can be the extension of the original one. And this is the difficult part, right? This is challenging. What we know, everybody, is that when the contrarian Fibonacci is going to retrace deep enough, okay, when the contrarian Fibonacci is going to retrace deep enough inside the AB boundary, inside the original AB boundary, and this is going to be the latest contrarian sub A, sub B. Okay, stay with me, try to understand this. When the market is going to retrace at the deep level inside the AB boundary, so we are going to delete this contrarian Fibonacci's. Okay, we are here right now, this is our contrarian Fibonacci, and when this happens, when the sub D extension is below, in this example, below the A, right? Now, when the retracement happens inside the sub A and sub B boundary, there is an 80% chance that this retracement is going to be the extension of the AB, of the original Fibonacci. Okay, I'm going to repeat one more time. When the contrarian Fibonacci retraces deep enough inside the AB boundary of the original Fibonacci, and when the retracement happens inside the sub A and sub B, there is an 80% chance that this retracement inside the sub A and sub B is an extension of the AB boundary. Okay, and the reason is the sub D is below, the sub B is below the capital A of the original one. Okay, so theoretically speaking, now we're going to go check the live market. Theoretically speaking, if you can find, see, let me draw the Fibonacci. This is the original one. If you can find confirmed Cs of the original Fibonacci, so this is A, and this is B, and this is B. If you can find confirmed, and the market is going to wave, right? It's going to retrace. If you can find, let's color code this in black. If you can find confirmed Cs, which are nothing more than a contrarian Fibonacci with the D extension, with the sub D extension above or below in this example, below the capital A of the original Fibonacci. Now, when the retracement happens inside the sub A sub B boundary, then this is, we have an 80% chance that this retracement is going to be an extension. And this is the power of the Fibonacci's. 8 times 9 of 10 the market is going to shoot up and hit the extension. Of course it's going to wave. Okay everybody, so if it's a lot of information and you don't understand, don't panic, don't bother, don't be angry. Rewatch this webinar tomorrow, okay, and the next day, and one more time on Saturday and Sunday. Rewatch this webinar, study these webinars, study it until you understand. Okay, now the AUD NZD and the AUD CHF are moving up, so we're going to take the AUD NZD 1 hour chart. We're going to compress the chart, right? Compress the chart, and we were in a downtrend, right? 1 hour chart. We were in an uptrend, and then we were in a downtrend, right? And we are here right now. And everybody, today is the 10th of April. Okay, this is a recorded webinar on the 10th of April, and this is AUD NZD 1 hour chart. Okay, now what we're going to do, we're going to do both. We're going to identify the original Fibonacci, and then we are going to do a trading exercise for those of you that are having difficulties finding the contrarian Fibonacci. Okay, so where is the A? Where is the starting point of the uptrend on the AUD NZD 1 hour chart? Don't mix the time frames, everybody. This is the starting point, right, of this uptrend on the 1 hour chart. Why? Well, if you compress the chart, we were in a downtrend, right? Lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. On the 1 hour chart, if you go on the 4 hour chart and daily, the picture is going to be different. You're going to have different Fibonacci levels for different trends. But this is the 1 hour chart right now. So we're going to zoom in. Okay, so this is the A, and I'm going to use the horizontal line to help myself. And we are going to talk about trading the Fibonacci numbers in the future webinars. I know I mentioned the stop reverse order, right? And you are interested maybe, oh, how to trade, but let's focus still on the Contrarian Fibonacci for the time being. So this is our A, is the starting point of the uptrend. Where is our B? This is our B. Is the first high as soon as possible after the A, right? So this is the B, and this is our C inside the AB boundary, Fibonacci retracement tool, and we're going to color code differently. Original Fibonacci here, ABCD, and the D is up here, right? Green goes to green. And as you can see, when we adjusted our original Fibonacci, the market broke it here on the right. So we are going to start again because we see that we are in an uptrend, right? So this is going to be our A. Why? Because this is the starting point, and our B is the first high as soon as possible. So this is going to be our B right now. And we are going to draw the Fibonacci retracement tool. Our C is the lowest point, and we're going to delete what happened in the past. It's not valid anymore. So this is our C right now, and I'm going to keep track of the swings. A, B, C, D. I need to find the D. I need to find the D. The D must be a high, so let's compress the chart. The D is up here, right? It must be a high, so A, B, C, D, and A goes to C. Come on. A goes to C, and this is our new A, and our B goes to D up here. Come on. This is the B, and we are going to draw the Fibonacci retracement tool again. So A, B, C, D. This is our B up here, right? So now, if this is the example, everybody, let me see if we have more, one swing more. Okay, yes, we're going to do it differently. Let's find the last ABCD swing, okay, and then we're going to check the contrarian. So ABCD. What is the C? The C is the lowest point inside the AB boundary after the B, before the market hits the appropriate D extension. So this is the C, and the D high is up here. This is the D right now. Okay, A, B, C, D. I'm going to keep track of the swings. A goes to C, and B goes to D up here. So A, B, C, D. This is the new AB boundary, A, B. And we're going to redraw the Fibonacci retracement tool, right? A, B, C, D. And let me see if this is the, okay, great, we are here right now. So let's perform an exercise when we are going to try to find the contrarian Fibonacci. Now, this is the AUD NZD 1 hour chart, of course, right? Now, in this example, everybody, let's delete. Okay. In this example, this is the B, right? So, and we don't have the crystal ball, of course. You don't see the market, you don't see the future. This is the B high of the AUD NZD 1 hour chart, right? So you want to find the contrarian Fibonacci. And so where is the starting point of the retracement? Where is the starting point of the, it's just an example though, where is the starting point of the possible retracement, right? Well, this is the B high. Right now the B high equals the sub A, right? Because we know that the market must retrace sub A. We know that the market must retrace in order to wave. So this is our sub A. And remember the rules of the down ABCD swing of the down ABCD Fibonacci, right? So if this is the sub A, where is the B? Where the B is the first low as soon as possible after the A. And we can see we have a low here, right? But it's not a confirmed low, not yet. We need 2 candles. This is a central candle, but we need 2 candles on the left and 2 candles on the right. So we are speculating that this is going to be our contrarian Fibonacci. So we are going to wait for another candle. We are on the 1 hour chart. And I'm not sure if this candle broke our sub A, so we are going to check. We are going to check the value of this blue engulfing. High is 1.05473, 1.05471. So as you can see, everybody, this is not a sub B, and our sub A, the market just made a new sub A. Okay, we're moving our sub A from the B high on the right, because this candle, this bearish engulfing candle, the value of the wick is higher. So this is our starting point of the retracement, if of course the market is going to retrace. Where is our sub B? Well, we want to see a low, right? So let's wait. And as you can see, the market broke our sub A. So we don't have a contrarian Fibonacci, not yet. We are going to wait, right? Wait. And the market moved up. So we are going to wait and wait and wait. Bam. Now we have a high, right? We have a new high. So we are speculating that this is going to be the starting point of the retracement inside the AB boundary of the original Fibonacci. We want to find the confirmed C, right? So this is the original Fibonacci, and we want to find the contrarian right now. So we have the sub A. This is a central candle with 2 candles on the left and 2 candles on the right. Now we need to find the first low as soon as possible after the high. So let's wait. Let's wait, let's wait. Bam. Now finally the market gave us the sub B. So this is the sub A, this is the sub B, right? And we can draw the contrarian Fibonacci on this one. Let's color code it differently. Okay, so why is this important? Well, we can trade the retracement, but we should know that we must have a stop reverse order, right? And the other thing that we know is that the C of the original Fibonacci is this low here. This is the C for the time being, right? So if you are going to take long trades, if you are going to enter buying this market, there we have a 50-50 chance for our trade to be a winner, because this C is not confirmed, right? Before entering the trade, we want to find a confirmed C, right? Where is the Fibonacci? We want to find a confirmed C. We want to find a contrarian Fibonacci so deep at the deepest level inside the AB boundary that we can say that the C is confirmed. Okay, this is what we are looking for. But we are in this level of the contrarian Fibonacci, right? And we don't know what is going to happen. So let's see. Am I going to trade this retracement? Well, maybe yes, maybe not. If you're a beginner trader, don't trade retracements, trade extensions, okay? So be patient. And some of you are asking already, oh Passion, but what if I cannot find a confirmed C? The answer is go find another trade on another currency pair or on another time frame. Okay, this is the answer. Passion, but what if I cannot find a deep C? What if I cannot find the confirmed C? Right? What if the contrarian Fibonacci is not going to retrace into a deepest level, into a deeper level? Go find another Fibonacci, go find another on another time frame or maybe on another currency pair. So in this example, what I'm going to do, I'm going just monitor, right? So let's see what is going to happen. Sub A, sub B, right? And I have, of course, we have the sub C. Come on, so sub C is the highest point inside this sub A, sub B boundary after the sub B, right? And we have also the sub D. Okay, so the sub D is down here. Remember, look at this. Sub A, sub B, sub C. The sub C or the C cannot be the same candle as the sub B, so this is the sub C. And let's see, let's monitor the market. And bam, we have a new contrarian Fibonacci. So if I would trade this retracement, everybody, this would be a winner, right? Because the market fulfilled the contrarian Fibonacci sequence. So sub A goes to sub C and sub B goes to sub D, right? And I have a new Fibonacci, a new sub, so this is the new sequence, sub A, sub B. And remember, if you're going to trade retracements, everybody, sometimes you are going to win, but sometimes you are going to lose. And you are going to have a losing trade. If you don't know where to stop, you are going to lose on the retracement trade, because the market is going to push, is going to reverse from a retracement to an extension. Okay? But we are here right now. This is sub A, sub B, sub C. Let's monitor. Okay, and as you can see, in this example, the market just broke our contrarian Fibonacci. So we are going to delete the contrarian Fibonacci, delete, and we are going to wait to find another one, right? Sub A, sub B, sub C, sub D. and I believe that we are here right now. This is the, oh, we have one more. So, well, I showed you already what happened. The market is moving up, right? So this is the market right now. Okay, so talking about the contrarian Fibonacci, we would have another contrarian Fibonacci. Whoa, this is a nice one. So let's make an exercise, and this is the live market, everybody. We have a contrarian Fibonacci in place. This is the sub A, and the sub B is here. Okay, now this is the new contrarian Fibonacci. Again, why in here, for those who have problems identifying the contrarian Fibonacci? Well, the sub A, this is the starting point of the retracement. Of course, this retracement is speculative in nature, because we don't know if the market is going to push lower or the market is going to push higher. Either way, this is our sub A, because this is the starting point from the time being of the retracement, of the possible downtrend. And as you can see, we have a high, we have a lower low, and we have a lower high right now. So this is the sub B. Why? Because this is the first low as soon as possible after the sub A, right? And this is our sub C up here. Why again? Because this is the highest point inside the sub A and sub B boundary after the sub B, before the market hits the appropriate extension. And our projected sub D is, red goes to red, is down here, right? Now, one or two things are going to happen, maybe three, right? We have three different behaviors from the market. Okay, so what can happen? Number one, the market can retrace and hit the appropriate extension. This is number one. Number two, the market can push up and hit the extension of the original Fibonacci. So green goes to green, right? This is number two. And number three, what can happen is that the market is going to hit our sub D extension, but because it retraced in that deeper level of the inside the sub A sub B boundary, maybe the market is going to stay locked for some times in this sideways movement. Okay, now talking about trading, what we can learn, what we can see, what we can trade. Well, we are, when this happens, the professional trader who is using the Fibonacci tool as a measurement for trading. The professional trader is staying out of the market. He is not trading extensions because the risk reward is bad, it's catastrophic. If I'm going to enter right now, this is my profit, the extension, the appropriate extension of the original Fibonacci, and come on, and this is my risk, capital A, because the market can do anything it wants, when it wants, for how long it wants. The market can go inside the AB boundary and stay months inside the AB boundary. So this is a risk I'm not going to take. So I'm not going to enter and, oh, passion, but the market is moving up. Yes, it's moving up right now, but we don't know what is going. I cannot place my trade. Okay, we cannot trade based on I think the market is going to go up, or I think the market, you know, we cannot trade like this. We need reasons, we need technical reasons, okay, in order to place trades, together of course with equity management, which is the reason I'm staying out right now. Okay, now Am I going to trade the retracement? Well, maybe I can trade the retracement, right? Because the risk reward is good. So if I enter a retracement rate, this is what I'm going to risk, and this is what I'm going to earn, right? Red goes to red. So maybe I'm going to trade this retracement, counter trend line break, on the smaller time frame. Okay, maybe I'm going to trade this retracement on the smaller time frame. However, I'm not going to trade this retracement on the 1 hour chart. Why not? Because the market is making higher highs, higher lows so far. Okay, this, talking about, we are boring sometimes, right? But talking about structure on the 1 hour time frame, right? Structure, high, low, high, low, high. So I don't have structure, I don't have a structure lower low on the 1 hour time frame. So if I'm going to trade this retracement, if I'm going to trade the sub A, sub B, sub C, I'm going to do this on the 15-minute chart. And this is going to be the topic for another webinar, everybody. Okay, did you learn anything today? Did you learn anything today? Especially the one who have problems identifying the contrarian Fibonacci. Remember, everybody, the contrarian Fibonacci has the same rules as the down original Fibonacci. Okay, that being said, this is FxPassion signing off. See you back tomorrow with another recorded webinar. And please, if you have questions, send it to me or to your Dukascopy manager, it doesn't matter. Until tomorrow, stay safe, stay strong, and trade with passion. This is FxPassion signing off.